welcome, ladies and gentlemen, and thank you so much for sticking around for this next conversation. Let's get straight to it. I'd love to invite my panel up on stage. Please make them feel welcome. Lord Stephen Carter is the Group CEO of Informa PLC. It's a listed FTSE 100 company specializing in B2B events. So welcome. We'll get you to take a seat over on that side. Excellent. Shehab Gargash is founder and chairman of Daman Investments and the MD and Group CEO of the UAE conglomerate Gargash Group. Hossam Arab is the CEO and co-founder of Tabby. It's a leading financial services player, last valued at a cool 3.3 billion USD. Mohammed Balud is the co-founder and CEO of Katopi. It's a Dubai-based cloud kitchen platform, one of the fastest growing unicorns in the region. And Madi Amjad is founder and executive chairman of Omniat. It's a developer with growing share in the Dubai luxury residential segment. So welcome. Ladies and gentlemen, as they take their seats, please again make them feel welcome. This works. We can work with this. Okay. Well, thank you again for joining in on this next conversation. I have really enjoyed listening to some of the numbers that have come up on stage so far. We can work with this.
I know.
Yeah. And let me just recap some of what we've seen in the last year. 2024, as you know, a record-breaking year for IPOs in the GCC. 53 listings, 13.2 billion US dollars raised, and that was a 25% increase from the previous year. Saudi Arabia led in terms of volumes, 15 IPOs on the Tadawul main market, 27 on the Nomu parallel market, and in the UAE we saw the total number of proceeds amounting to about half of that full GCC volume. So that was 6.2 billion USD across 7 IPOs. So a lot of activity happening in this part of the world. The Gulf, as you know, has really stood out in terms of deal flow and fees. That's great news for our banker friends in the room. But it has also really stood out in terms of ambition on regulation and reform, and of course on regional and global investor interest as well. So today we're going to talk about some of the trends driving that and what it takes to list and scale in the region. So let's begin with a broad opening question. First of all, just maybe a state of play on the capital markets as we stand. A question from my panel. From your perspective, we started the year, it would seem, all trumped up. Now there's headlines on tariffs and trade certainly adding to recession risks in the market. That's driven a valuation reset in the equity space. So how are each of you seeing sentiment in the capital markets and the appetite for IPOs right now? Is our region as resilient as the trends might suggest? And Lord Stephen, I'll go to you first on this.
Well, it's very good to be here. Thank you for the question. I'm assuming there are a lot of capital market experts. I'm an operator, not a capital markets person, but there's no doubt that the first 3 months or so of the year has been a high level of news flow, and so there's a lot of watching and waiting going on. We operate in 40 countries around the world. We're listed in the United Kingdom. We have a subsidiary or a control business which is in a separate market, which is listed on NASDAQ. Actually, we just posted our Q1 numbers, which are very strong. So at an operating level, the business is doing somewhere between well to extremely well. But in both of our publicly traded equities, our equity is off 15-20%. So the markets are cautious. You don't need me to tell you that. What does that mean for this region? Well, look, right now this region, and certainly this locality in the region, as you suggested, is a kind of somewhere between a haven and a hive of hope, activity, optimism, trade flows, and if it plays its cards right, which it generally does, upside. So, you know, I think if you take the mid-view, there's a lot of opportunity and volatility. If you're the innovator, the new player in the world of capital markets and exchange, now's the time to play your cards.
Mohammed, next to you on this.
So we're 2 to 3 years away from wanting to be a public company, and if that's our view, in all scenarios, we project there could be a win out of this, right? So if markets continue to be as solid as they are now, we're seeing a lot of listings in the region here being at year-on highs. So I think that if things continue, that's great. But if things, given the if oil price changes and things end up not performing as well, we see this as a good opportunity to double down and do more. Since we're a private company, there's a lot we can do there. So I do think that given our window of wanting to go public is in the next couple of years, there's actually a lot of opportunities regardless of whatever happens on the macro stage, on things that private companies can do better.
Hossam, you'd agree with that?
Yeah, I think we're in a similar scenario. So in terms of the window, we're probably slightly earlier. So there is some time to consider what happens in the markets around us. And what we do between now and then is continue to build and set ourselves up for being ready for a public listing. And so there is quite a lot to do internally and putting ourselves in the right shape and form for a public listing. We're also unlikely to be able to time the markets perfectly, and so we're aware of that, we're cognizant of that. We have seen in our space we're a buy now, pay later player for anyone that doesn't know. We have seen a casualty in the US. So Klarna did decide to pull back on their IPO in the short term while the market gains a bit more clarity. So we're a bit fortunate to have a bit more time to figure things out, and until then we continue to build. The one thing to obviously remain aware of is, as while our market has been somewhat resilient in the short term today, we're not immune to changes in oil prices, and that's where we're a bit more concerned around just a broader recession having an impact on consumer spend and credit performance for consumers in the markets that we operate in. So that's the one thing that we want to track and watch as oil prices fluctuate. But beyond that, we continue to build and make sure that we're ready.
Okay, I have plenty of questions for these two, so we'll come back to that. But Shehab, wanted to go over to you as well. What's your take, and particularly the translation for consumer spend, as we see some of the concerns around the public markets ramping up and also lower oil prices, as both Sam and Mohammed have referred to? What's the impact for your business?
I think what's going on in the world, the turmoil that's going on in the world, I think provides an opportunity for our region. Number one, we are small as a region. Number two, we are on the sidelines as a region. And I think if we put our head down and do the daily work the way we continue to do, I think we stand to gain a lot while the rest of the world fights it off in trade wars. I truly believe the opportunity for this region to capitalize on the turmoil in the world stage is not to be missed. So if we just continue to forge forward, I think something good is going to come out of it.
Okay, watch this space. Marty, to you.
I think Shehab just said it beautifully. I completely agree. We are in the real estate space, and we continue to supply this phenomenal growth that Dubai has witnessed, and global migration to Dubai, and the tourism growth, the population growth of Dubai. So I think the global turmoil actually will play well for Dubai's fundamentals, and then we continue to see that is in a positive trend. I think in the next couple of years, reflecting the visibility that we see in terms of migration to Dubai, I think will be very strong, and that plays very well to the fundamentals of Dubai. I think the leadership of Dubai has consistently delivered on focusing on what's right and attracting and creating a conducive environment for business. And with those fundamentals accelerating and the global connection of Dubai is increasing, we continue to attract, and we're seeing a major migration. Our Q1 results were fantastic, and we continue to see demand come to the city.
Okay, really fascinating. Shehab, I wanted to go back over to something that you said before, and it's about the development of the region in particular. We're at a capital markets conference, so let's talk about it. How would you characterize the maturity of the GCC capital markets today? What is working and what's missing?
Okay, it's important to put it in the context that this still is a small market, even with the collective multiple markets in the region, and it is also a relatively younger market. So I go back to our beginnings at Daman 27 years ago, where it was still paper trading. For example, bond fixed income markets were virtually non-existent at that time, and of course all sorts of fancy derivatives were non-existent. So I think we've come a long way in a very short period. Having said that, I think we're still at the beginnings. I think we've seen a very welcome introduction of regulation and a tightening of the market regulation, which gives it credibility. I think overnight cowboys will have difficulty coming in today, where in the past perhaps they didn't have that difficulty, which is again a good sign. I think we're getting some very creative structures put in place. I think our friends there have just issued a sukuk to finance their growth. Just one example of the multiple items of news that we see coming up from, whether it's Dubai, whether it's Saudi Arabia, Abu Dhabi, all sorts of markets, and the volumes are very encouraging. We're seeing the old days of boom and bust are no longer the norm, where the market would be flooded with liquidity in one year and then deprived of liquidity the next year. I think there's more regularity, there are more institutional players, we have a more educated institutional investor as well as a more educated, getting there, retail player. So all those collectively promise us a very bright future for this space into the future, and I think we are seeing especially government overseeing and ensuring, almost like incubating an environment that makes it a more viable proposition for us and all our colleagues in the industry.
What we've seen is, of course, really a big effort to improve liquidity, particularly post-listing, also efforts on the regulation side, the introduction of new products, improving sophistication of the capital markets here as well. And I think, as you say, that's also been reflected in what Mehdi has just done at Omnia with the issuing of this new green sukuk. Big development on the DCM side for the region. Did you want to talk about that?
Sure, it's been a phenomenal transaction for us last week. Well, it actually was beginning of this week. It just feels a journey. We were oversubscribed significantly. We went to the market with $350 million benchmark size, and we had to oversize to $500 million, reflecting a close to $2 billion demand. Price tightened 3 times to reach 8.375. And what was exceptional to witness, we had over $460 million of global international demand. I think, as per our advisors, this was one of the highest demand they saw from international markets to a debut issuer in real estate space here in Dubai. I think this all reflects the quality of Dubai performance in the eye of international, as well as the sector real estate, and of course as well as Omnia brand of the work that we've been doing for the last 20 years in this space. Omnia today is the largest ultra-luxury developer by market share. Over the last 3 years we have performed significantly well. We have a phenomenal track record of performing, and it was great to see that being appreciated by the marketplace. I think the capital market gives us, and this is a program that we've just started, it's a long-term program, so we see this as a major source of capital for our growth, and to have such a fantastic debut issuing just encourages us to focus on the capital market, understand its potential, and looking at how the international market responds to Dubai was very well received.
It's interesting to see the growing international interest in the region. Of course, a lot of the IPOs that we've seen have been state-backed or part of a broader privatization agenda. I want to know from Mohammed and Hossam, what is the appetite in the region, or at least even in your business, for these private founder-led companies to go public in this part of the world? Because that is, let's speak realistically here, where the gap is at the moment. The IPOs are majority, state-led. Where are the private founders coming into this? Did you want to speak to that first, Hossam?
Yeah, there's clear appetite. I think the gap is there. What we've seen historically, as I said, is mostly state-led, real estate, utilities, etc. There's been very little in the form of growth coming from sectors like tech. I mean, just for some perspective, we grew 85% last year, right? And for investors in this region to price that like hasn't been tested yet. We've seen investors very comfortable around yield plays. So there is a question mark for us, and the advisors are saying we're getting, the investors in the region are getting a lot more comfortable around growth plays. But the question for us remains around who prices this. Is it a global investor that has experience and appetite in growth plays and has priced this in the past, or is it a regional investor, a sovereign, that is getting more comfortable around growth plays? So that is a clear gap, but a very, very clear opportunity as well, because from the few examples that we've seen, Talabat being one of them, the appetite is there locally. The question that remains is just about pricing.
Okay, so let's talk about it, because you and I have mentioned this in past, even in public settings like this. Tabi has become one of the region's most closely watched IPO stories. You've raised from the biggest names in global capital. What's the holdup?
There's no rush. We did a private round fairly recently, just to ensure, and to be honest, I think looking in hindsight, it was definitely the right call. The idea behind it when we did it was, let's take some private capital, given that it's available, in case there is a slowdown in the public markets, or in case there is a change in appetite and what is happening in the public markets. Obviously, at that point in time, things were looking very bright, so there were no concerns, but you never knew. So we wanted to make sure that we had at least some buffer, some comfort as we built towards the public listing, to ensure that that if things did change, we were in a pretty good spot. And so that has at least bought us some time. And now we let it play out. We are continuing to build internally on governance, on reporting. Decision making is very, very different, moving from private to public. And so we want to make sure that we're in the right spot to be able to tell this story to the public markets and public investors. In terms of timelines, I think we are looking at some point in the next 12 to 18 months. That remains the case. If the markets turn around earlier, then maybe it is closer to the shorter end of that time frame.
So am I correct in thinking this is more about market timing than internal readiness at this point?
It needs to be both. I think if the market was ready today, we would not be going. We would not be listing today. We're still building out the readiness. We want to make sure that we're in the right spot. I don't think we're very far from that, but we need to get it right internally before we get it right externally. I think we're as I mentioned earlier, we're never going to be able to time this perfectly. The environment needs to be accommodating, but it can't be perfect.
How important is the profitability metric?
Today, much more important. I think if the only period of time that I recall recently where that wasn't a requirement was probably in 2020, 2021, right before COVID. Things have shifted quite considerably right now, both for public and private investors. So most of the private investors that we have that have come on board recently have focused quite a lot on profitability, and at least for companies that are not profitable, they did want to see a clear path to profitability. On the public side, I think it's ever more important today, especially for a market like ours. A lot of our investors, again, to the previous point, are looking at PE multiples, to a lesser extent, gross margin multiples, but PE is clear. But even extend more globally, all the investors that we're speaking with are a lot less focused on revenue growth. Revenue growth needs to be there, so that's table stakes, but they are extremely focused on gross margin profitability.
And just finally on this point, how important is location?
Location, the way we think about it is it needs to be relevant for the investor base that we're operating in. And so for us, the GCC is very clearly the right target for us. Obviously, beyond that, you want to look at elements like liquidity and investor appetite. But for us, we are optimizing more just relevance to the market that we want to list in, rather than a flashy NASDAQ or NYSE listing.
Interesting to watch. Okay, watch this space. Mohammed, over to you on this as well, because in a similar fashion, Katopi's scale-up story has been regional, but of course, IPOs in your space are still quite rare. So do you think, having listened into what you've just heard, and also the conversations you've been having in the room today, that the Gulf markets are liquid enough to support a Katopi listing?
So I think things have changed a lot over the past couple of years. I remember with Hamid, we used to come with this expression that our investors were, or potential investors were always concerned of it. At the beginning was like a liquidity issue. And I guess that is no longer something people worry about, or it's a regulatory issue. That's no longer what people are worried about. I think the key thing that we need to be looking at is obviously, the venue listing, what matters based on our investor base. But also, I do think that this dividend yield play versus growth play is yet to be tested. In Saudi Arabia, there's a couple of data points to show that growth stories are relevant there. In the UAE, I predict that in the next year or two, we will see more growth stories that are going public, that are not out to give a dividend, but are going to reinvest a lot in. And I think that's what's left, is because we're a business that will want to continue investing and be seen more on the growth side versus just the yield play.
Timeline?
So 2 to 3 years is what we think there's a couple of milestones we want to cross before we get there, in terms of hitting certain scale metrics, both top line and from a bottom line perspective. And so we think we'll get there in the next 2 to 3 years, and that's probably the right time to hit the trigger.
And again, similar question that I asked Hossam, but how important is location in your decision making?
I don't think we even talk about it anymore internally. I think the decision is made that it's going to be a regional IPO. I think I read an emerging market business going public in Europe or the US. I mean, there's very rare examples of where that's been a success story. And so the reality is we're pretty fortunate to be operating in a region where it is very active. Listings have performed well. And so the natural progression for us is to list here.
I think one more point just on this is one of the things that has changed is private investors are starting to shift away from this need to exit within certain windows, and we're seeing more and more VCs. A couple of examples just this week on VCs that are restructuring their fund model away from a certain fund horizon to be able to hold more long term. That historically has been a driver for at least a number of private tech companies to be pressured to exit public exchanges. Right now there is, I think we are moving towards longer and longer windows as these private investors shift gears and shift strategies.
That's interesting as well, because one of the themes we often hear about in the context of the conversation around GCC capital markets is that, as I mentioned before, low liquidity post-listing is an issue for international investors. Many Gulf IPOs see really strong demand, they're often oversubscribed, but then there's thin trading afterwards, and I think there has been a real effort that's gone in to try and address that. The other issue is, as you say, Hossam, the presence of cornerstone investors as well, and demand engineering. There's one international investor who actually said to me that the GCC has almost like a Majorless put. So I'm curious to get your take on that as well. Do you think there's been enough work going in to try to address some of those issues and ensure that the markets do have the international credibility that they need to support businesses of the size and scope of yours?
Yeah, I think the challenge has been, and again, we're not public yet, but this is mostly hearsay, is that a lot of the international investors that have looked at this market have had, they've done the work, they're sold on the story, they're sold on the market, and then they get a sliver of supply, right? They get very, very little allocation. And for them, it's just not worth the work and not worth the effort of allocating time, resources, etc., to watch this stock as they, and continue to follow it and cover it over a longer time horizon. And so what ends up happening is they're coming in for this short-term pop, which may or may not happen. That is something we need to obviously address as we start to build out the book and figure out if we are bringing in some of these international investors, we want to make sure that they're in it for the long term and to ensure that that allocation that they get is substantial enough for them to give stocks like ours the importance.
And that, I think, is the critical issue. We've come to the top of the iceberg here on this panel. I can also say that because I speak with them, regulators have been working hard to improve governance, reporting standards, disclosure quality as well. So there is work that's going into this space. Let's push the conversation forward. Stephen, I wanted to go back over to you on this because you're actually running a publicly listed company, dual listed in the UK and in the United States. Any advice for these two?
I don't think they need my advice. They seem to have done pretty well so far. I mean, public companies, someone said to me a few years ago, there's only really one reason to be a public company. That's because you want to be able to raise equity, because it's a very efficient form of financing. But you want to be able to raise equity to do something. So you've got to have a company that's got a strategy whereby equity financing is a sensible thing to do. Running a public company definitely comes with, I take the comment from one of the earlier speakers, comes with a different set of governance around decision making and reporting. I actually think that's a little bit of an opportunity for this market, because if you look at fund flows in the major exchanges, certainly the exchange that we're primarily listed on, the LSE, I mean, in my time in and around UK public companies, the position of the LSE in fund flows is fundamentally different from where it was 10, 15, 20 years ago. So I think there is a real opportunity in the public markets to establish another major exchange point in the world. And there's absolutely no reason, to the comment made earlier, that this region and this market in particular, Dubai, could not take that position. You've got to ask yourselves a question about how many exchanges can the region maintain. You've definitely got to get the governance right. That's a kind of hygiene factor. I actually served a term as a regulator, not as a financial regulator, but as a regulator in another sector. And getting regulation right is very important. The word that was used earlier was credibility, but it's a very short journey between credible regulation and burdensome regulation. And particularly when you're trying to emerge on the global market for public liquidity, you need to get that right. And then something that I think Dubai, let's be honest, does better than perhaps anywhere in the world is you've got to market the brand. I mean, NYC is a brand. LSE is a brand. I think Amy would agree with that. You need to create an identity. Obviously, you've got to have some of the fundamentals around liquidity, depth of trading, deeper capital pools, international investors. But along with that, you've got to stand for something as an exchange brand. And that's relevant to attracting both investors and indeed people who run public companies or who have the ambition to run public companies. What would be my advice about running a public company? Beware of what you wish for. There's a lot of fun in running a public company if you're in a growth market. Sure, the world's focused on profit right now, but of course the world's focused on profit right now. I've been doing this for a long time. I've seen focus on revenue, focus on profit, focus on cash, focus on margin, focus on earnings, focus on dividend. You've got to, what's your focus on the business? And someone said there are only three types of company. Those that grow between 0 to 5%, they're yield businesses. Those that grow between 5 and 10%, they're attractive businesses. Those that grow 10% plus on a recurring basis with attractive drop through, good cash and good profit. If you're going to come to the public markets, you've got to have a pretty clear sense, where's your business, where's the market you're trading in? Are you a yield business, are you a growth business, or are you a high growth business with the profitability that flows from that? And I think that's also relevant to where does the exchange want to position itself, what type of companies. The FTSE has a particular footprint of companies. What footprint of companies does the exchange here want to have in 5 or 10 years?
That's an interesting point too, and Shehab, I think you can speak to that as well. This really critical issue of sector diversification on the listed exchanges. You're running a conglomerate. How do you think about that diversification trend, and how important is it when it comes to improving the sophistication of the markets here?
Well, I think the diversification in our market is, I think, essential. We're no longer known as an oil-only economy, the whole region again, and that's good because you can't, as important as oil is in the overall equation, it's not the only game in town. Therefore, I think various companies have to position themselves, and especially conglomerates need to identify what's their primary raison d'etre. What are they out there for, even though they might be conglomerate covering 4 or 5 different sectors? There's always a signature for a company, and it has to market itself, position itself as the best choice out there in that particular field. And that is a combination of all of that is what gives the market its flavor, its color, its attractiveness. And hence, it becomes more appealing to learn more about the market, engage with the market, and essentially invest in that market.
Will we see any Gargash businesses going public anytime soon?
There's a bigger story there which is somewhat unique to this region, which is the family business. And family businesses are today less so about capital raise, although it's an important part, but they are essentially funding themselves. I think that's one, but the 2 others are governance and legacy. These families need to figure out what is the best way of governance now that they know they are no longer a single shop selling something or another in a small corner. They are big, they are sophisticated, and they are an integrated and important part of the private sector. The third item, which is the legacy, I promise you every family in every country, every day, is considering what is the legacy of this family going forward, and how does that translate into the future shape, form, size, and position of the family company vis-a-vis the broader market. So those are considerations that are taking place, and those are considerations in my mind that over time we will see more and more family businesses tapping the public markets mainly for organization and for governance, and of course comes with it the ability to raise capital and grow beyond their current size. So that is a very unique position for family businesses, and family businesses play an oversized role in our region.
Indeed, and we've seen a recent directive as well to these family businesses get in shape to avoid disputes. Do you think the capital markets can be an option when it comes to, as you say, legacy planning moving forward? And from your very unique perspective, is that something that the family leaders that you speak to are actually considering?
I think the family leaders are considering a lot of things, and I think families by their nature are unique stories. So the considerations for each and every family is somewhat different than the other. I think those three overarching requirements are going to impose the narrative on various families. Regarding how the families approach them, then it becomes the unique dynamics of each family on how best to approach it, because every family business will be able to judge for itself the best approach to take.
And the UAE has some extraordinary family businesses as well who have really contributed to the growth and development of the nation. So that will be interesting to watch as well. Madi, I wanted to go over to you and to my question earlier about what's happening with the diversification of the market. There hasn't really been many real estate IPOs recently. And I think, real talk again, fair to say, the real estate companies that have listed over the years haven't necessarily shot the lights out in terms of performance. That would be, of course, despite the strong market debut that we saw for those entities. So what does that tell us? And what do you have to say about your own capital market plans moving forward as well? I know you said before that you're more focused on DCM, raising cash to fulfill business objectives. How are you thinking about this moving forward?
So to put things in perspective, real estate built to sell model, which is what we are specialized in, is over $100 billion of annual sales in Dubai. I think last year was over $115 billion and growing, and continue to grow over the last 3-4 years. So it's quite a substantial market. When you look at the region, it's more than double that. So we're talking about quite a sizable size of the business, and it's continued to grow. However, the dynamic of real estate development businesses that are focused on build to sell is very different than the typical public listed companies, in my opinion. I think IPO is not the right, equity sales and IPO is not the right approach to capital structure for the development companies. Like Lord Stephen said, you must have a very clear reason why you go into the IPO. And when you have access to the capital market through DCM, in my opinion, it's by far fits correctly in terms of cycle of build to sell. We are the businesses that generate a lot of cash that we can basically fulfill our own growth, and we'll be witnessing a phenomenal growth for the group, and we're forecasting an exceptional growth, and we do not need to access the IPO market particularly. However, the regulator in Dubai is now focusing on the next big REIT. I think there's an announcement happened recently with Dubai Holding planning a REIT issuance, which I think is fantastic. And I think if we can see that market maturing like Singapore is today in the real estate REIT, I think that will play a major positive role in the real estate capital market of Dubai and the region. And I think between the DCM market and the REIT market, these two play a fantastic two tools of the capital market for real estate development businesses that can fuel and give access to the market to invest in. I think that's particularly is my personal opinion. I think that reflects as well the same in what you've seen in the market. There's a gap between valuations, expectation of the development companies, and what market can look at from a discounted cash flow perspective. Hence, you don't see a lot of real estate development companies coming to the market.
So why is a tradable instrument like a REIT, for example, good for the business?
Actually, that's a fantastic, from a real estate development companies, it's a fantastic tool because it gives us the highest realization in a matured portfolio. So with the REIT, we can develop a portfolio, grow it, stabilize it, and give the market what the market needs, which is a steady cash flow and a predictable cash flow on a quality asset. So it's a win-win business model. For the institutional side, they need predictable, consistent cash flow and a predictable profitability, which REITs usually provides clear visibility. And from a development companies, it's excellent because that gives us a maximum realization capability, so we can realize the maximum profit in the development cycle and provide a fantastic exit to continue to reinvesting in the development business. So I think the combination of these two give us an excellent platform to invest and interact with the capital market. I think, as mentioned earlier, it's very important to understand the purpose of why do you tap into capital market, to be able to service it and make sure it's long-term and sustainable. And I think with the recent REIT, we will be watching very closely how that performs and drives, and I'm sure whatever Dubai does it in style and does it well. And I think with Dubai holding such a prestigious portfolio, we're watching very closely to see that footsteps, and I think we'll follow on the similar footsteps to bring to market stabilized portfolios that are having a fantastic recurring income.
Okay, we have about 5 minutes left, so I wanted to go down the panel, and I think down the line on the panel, I think a nice way to pull all of this together is just to ask you, is there anything that we've missed, or do you have any final messages for this esteemed group of people who have been listening into the conversation today about the developments of the capital markets, about regulation, about the prospects for IPOs in this part of the world, or anything else we've left on the table? Mohammed, you first.
So I think for us, key thing to look at now is do we see high growth businesses going public, and how are they valued at? What's the excitement behind a high growth business, specifically in Dubai? So that's something we're going to wait and see before we go out the gate. And I think there's a lot of traction already happening. I know of a few colleagues running other businesses, high growth businesses, that are exploring an IPO very soon. So that will be interesting to see how investor dynamics shift. And I do think the DFM themselves can do a lot to keep promoting the right institutional investor base to back such stories.
Awesome.
Yeah, similarly, I think we're all excited. We've seen a couple of recent examples that have shown and driven very substantial demand. So the market seems ready. The next question is, as Mohammed mentioned, around growth and hopefully we will have a few more examples there. I think the one thing I would say is the market over here, from a commercial perspective, is clearly ready. Right? We were very clear that the opportunity is large and deep enough in the GCC and Dubai, the UAE, to go after. And so when we think about growth, we really don't have our eyes set beyond what is clearly a deep enough economy in the region that we operate in. And so the opportunity that we see for ourselves is one more centered on depth rather than breadth, and planting flags in various markets that are a lot less interesting in the markets that we operate in.
Shehab.
There is a tremendous amount of liquidity, unprecedented amount of liquidity, that is destined for the region, both generated internally and externally. The opportunity here, in fact, the once-in-a-lifetime opportunity, is to find homes for this liquidity so that it doesn't go elsewhere. And I think the evolution of the capital markets and the variety of options and instruments and destinations for that liquidity promises a very positive future if we push through the capital markets agenda of the region, that we create these destinations for this liquidity.
Stephen.
Well, look, this is a great conversation to be having, and possibly a great conversation to be having at this time, because in the world that we all live in, not the place where we live, but the world we all live in, it's shape-shifting. And certainly in my adult life, things that have been articles of faith, of structure, of geopolitics, of macro institutions, of power positions, they're shape-shifting. And that's an opportunity. I absolutely agree with your comments earlier that sometimes size, relative size, can be an advantage if you know how to play it. Dubai, in the years I've been coming here, has done an outstanding job of doing the thing that a boss of mine told me years ago. So the difference between an executive who does a job, an executive who leads a business, is the difference between seeing and doing. Everyone can do, but not everyone can see. And in order to see, you have to be able to do a bit of time travel. You have to go forward 5 years or 7 years, make an assessment of where the world's going to be in 5 or 7 years, and then work out how you're going to adjust to that, and then come back to the time you're in now and then plot that path. And Dubai's done that very well in many areas, not least in our core business in B2B events. It's become a global hub. And so I think that's the path I sense the DFM are on. If I'm allowed to do a shout out for Hamid, I think the focus on customers and engaging customers early is as good as I've seen in any exchange location anywhere in the world. And then the other comment I'd make is the thing that's harder to find than capital. You definitely need the capital market structures that you're referring to and taking advantage of skillfully. But the thing you need more than capital is you need talent. And there's a real opportunity to continue to do what Dubai is also doing, which is stealing an unfair share of the world's talent. If you can spot that future opportunity, map to that, put in place the DCM and broader capital market structures, and steal an unfair share of talent, there's a real opportunity here.
Mehdi, I'll leave you with the final word.
No, I think I would like to just take a moment to appreciate the phenomenal success that Dubai had. I've been in Dubai more than 30 years. When I landed here first, we were 500,000 people. Today we are more than 4 million people. That is doubling our population more than 3 times in 3 decades. This is extraordinary. And with D33 plan that are in making and happening and tracking very well, testing the economy again in 10 years. These are remarkable numbers we are witnessing here happening in front of us. I've traveled the world, I have lived in different places from the New York and Toronto all the way to Singapore, and I have not seen a city that is delivering this level of consistent performance. And what I see in the next 10 years, looking at the future, for sure we have an extraordinary opportunity to double double down on everything that Dubai has been doing, and Dubai to continue to double down on that. And as a private sector, we take that as a responsibility to actually continue to fuel that momentum. And I think with massive amount of liquidity that Shehab was referring to, it's a perfect match for us to realize. And I think the world also needs that beacon of hope, that a city with multicultural, with more than 80% representing 200 nationalities, 80% of the population of the UAE is coming from 200 nationalities, working in harmony, creating such a unique, harmonic, consistent growth, I think is a beacon of hope for all the world to look at, and it's a phenomenal journey to be part of. Thank you very much for your time, and thank you for the leadership of Dubai for giving us this phenomenal platform to shine.
Well, I think on that positive note, we can wrap up our conversation. So ladies and gentlemen, thank you so much for listening in. Thanks to our panelists. Thank you for